Greetings, members of the Hash Plutus community. I'm Mr. Potato, and we'll be reviewing the 21-day exponential moving average on Bitcoin. Okay, probably the first question to come to your mind would be why specifically the 21-day exponential moving average. Now, in my opinion, this has always stuck right around the close of a candle. Now, why is this extremely important? When a trader is looking for a possible support or resistance level, the closer the EMA, the better. I hope all of you remember when $5,800 was considered as the last or major support of Bitcoin, and once it broke that, it started crumbling down. Why is this so important? Now, when you consider the two schools of thought, first one being more the number of times the asset tests the support, the stronger it gets. The second being a more logical approach. Now, what happens when you throw a pebble into a pond? It bounces off the surface a couple of times and then sinks to the bottom. Similarly, the $5,800 floor, which it was considered back then, it bounced off this level 5 times, and after that, it just sank to the bottom. We just crashed after that. Moving to the 21-day exponential moving average. What happened here was completely opposite to what would happen in the pebble and pond case. Every time we bounced off the 21-day exponential moving average, we went to a higher level than it was. Now, this was quite surprising, and this proved to be a very useful indicator for, scalping around. What really fascinates me about the 21-day exponential moving average was what happened back in November was the price of Bitcoin dipped right below the exponential moving average, and then it just went down crashing. So this proved to be quite useful to figure out when the dump is possibly going to come. Now, if we were aware of this back somewhere around a couple of weeks ago, we could have figured out that when Bitcoin goes right below the 21-day exponential moving average, we're going to see a crash. And every time it bounces off it, we're going to see a great pump or a nice reaction of a springboard from this level. But again, we failed to figure this out, but not too late. We have this now. And as you can see, time and again, every single time it bounced off the 21-day exponential moving average, it was like a springboard. It just bounced off to a new level. So this probably helped us gain a lot of momentum in the past, adding volume. As you focus at the volume bars, every time we hit the 21-day moving average, the price just shot up. And at the same time, even the volume shot up. Now, key takeaway of today's video is the more the number of times the price of the asset hits a particular level, the weaker the asset is getting, and it's probably time to sell. So every time the price of the asset dips below the 21 exponential moving average or hammers the previous considered floor, I think you should start cashing out in your positions, because the magnitude of the rise after a bounce is going to be quite low, so you can start shorting the market. Moving towards today's trade update, I think we can start using this strategy to make a simple move on the coming days of Bitcoin. I prefer using this on the 1 day. Quite simple for a move right now, mixing both of them. A jump above the 21-day moving average would call for a long, else strong rejection from the 21-day exponential moving average would send us down to the previous support, and not holding would lead to another crash.